All right. Good morning, everybody. Here's your spot gamma levels, SPX and ES. So you can grab a screenshot. SPY, the NDX and the NQ. Or the QQQ. We got Fed Chair Powell speaking today at 2 o'clock. And we have Christine Lagarde out of Europe speaking today. Two big powerhouse speakers. Europe is up. The small caps doing the best out of our markets. Then the Dow, then the S&P, and the NASDAQ dragging its feet. We got Japan basically flat and Hong Kong down close to 0.5%. We have the 30-year bond today. It's a big deal. We're going to get some job numbers. Those are always important. There's different levels, right? There's different ones that are more important than others. Non-farm payrolls being the greatest of them all. But initial jobless claims, hey, that's no joke. We want to keep our eye on that number today too. So it's going to be one of those days. Really a lot of divergent signals. Probably a continuation of our broken tools. And then we've got, other Fed speakers that are going to be chipping their teeth as well. Bostic, Barkin, Rogers out of Bank of Canada. It's going to be one of those days, but it's going to be a good day. So if we take a quick look at US dollar Japan, this is their 10-year bond. We're basically right back where we started, sitting at around 0.84. So yeah, we're up a little, but we're only up to get back to where we were. Still, when I zoom out and we look at this on a bigger picture, this thing is still overly bullish. Put it on a weekly, and that aggressive bullishness really stands out. So we still have a significant threat. One down week does not end this threat. And if we were using pure price method, we don't have an end to this pullback yet. So we don't know if it's going to be a higher low or not, right? We just don't know yet. So this continues to be the greatest thing to use when looking at US dollar Japan and trying to discern if they're going to run any sort of intervention or not. So we are getting back up towards that 152, but with the 10-year for Japan being down like it is, it's hard to see the intervention. Eight 8:30, 10:30, 11, 11:30, 1 o'clock, 2 o'clock. it's a full house all day. And then some of these are divergent enough from each other that we could be up and then down and then up and then down again. The volatility trigger is at 43.86. Zero gamma is all the way down at the 10-day moving average, 43.40. So it's a long ways off. We are bullish when we're above these levels. That means we expect lower volatility. Pinning maneuvers can work a little better. Volumes within range, sitting at 87. That's okay. It's a little light, but it's not enough to be concerning, especially with everything that we have on deck. We don't have a missed daily pivot because we've already hit it a couple times this morning. We're still a long ways away from the weekly pivot. So we still have that expectation that we're not really going to drive too much higher because of how far away we are from here. I say that, but price can wick up higher like we did a little earlier this morning and then come back in again. We just don't expect it to close, say, above that 44.11 cog line this week. Now, with the amount of data and speakers that we have on deck today, we could do the unprecedented and we could expand significantly, just like we did last week. It's not unheard of. It's not impossible. What we focus on is the probabilities, right? We tend to do what we normally have done, which is why averages are so important. The average says we've been moving about 1.3%. So we could move 1.3% again today. And that range would be those two red lines. Well, that gets us above that 44.11. So, it's possible. But when we see where we came from and how fast we got there, it's hard to see the path to that red line. But just keep in mind, what a market generally does is what it will generally continue to do, but outliers are there for a reason. Measuring last week's range and projecting upwards gives us 45.15. And it puts us up into these wicks around that 45.30 cog line. And even though it would be unusual to make such a move, we can do it. Take a look at what we've been doing for the week. If we were using OCR, we continue to set higher highs over the last 3 days. We've continued to set higher lows over the last few days. And sure, we had a lower close yesterday, but we still had our higher high and our higher low. So the lower close is just a little bit of a warning. It's a cautionary tale to get you to maybe tighten stops a little bit. But otherwise, if we were using OCR, the trend is still on. 44.25 lines up no matter which way we measure things. So if we do make an upside move today, 44.25, or looking at the intraday 44.22, which is that ADR line, that's our target. So if we start to get bullish, start moving to the upside, 44.22, that red line, ADR half, 50% of yesterday's measured move. Either way you want to go, that's our target, right? Now we do got a cog line at 44.11, but we've also got some voodoo lines up there. It's at the same spot, 44.11. Underneath this 43.95 is a voodoo level, and there's not another one until we get to the full ADR at 44.50. Day 30-minute volume profile. We're starting to build out a classic B shape. We do have a very shallow area though through this whole system. So if we do break that 43, call it 43.70, 43.60 area, there's nothing down here to help us out. We're going to fall through it really quick. We have spent the greatest amount of time at this level. We've been here since Friday. So, you know, we have the point of control because we've got the most volume up here. But also, I said that wrong. This is where the greatest amount of volume is, but we still have spent more time in this lower zone than we did in this upper zone. Now, throughout the day today, we're going to lose Thursday's volume. And of course, Thursday's time is going to come off. We might finally see this TPO move the point of control up at that point. But it could take one more day. Either way, there's this great shallow area because we moved through that zone really fast. We didn't leave very much of a footprint behind. And so we can fall back down through it. So there's nothing there to really kind of help us out. There's a little bit of a shelf around that 43.38, 43.35 area. We spent a considerable amount of time and we got a considerable amount of volume there. That would be our last hurrah, like a little speed bump. We still don't have a point of control to carry forward. If we were to try that from yesterday, we'd already crisscrossed through it multiple times. It has no value to us here. The edge of the weekly expected move is 44.35. Now, we came into this week with the expectation that we really weren't going to do much. And I mentioned on Monday that it would be a good week for, say, an iron condor play or some kind of ranged play that takes advantage of the idea of price not going anywhere for the week. And this is the range that we would play against. We close inside of that range on the S&P 80% of the time, which overstates the one standard deviation, which suggests we should do it at least 68% of the time. Because it's the S&P, it's way more accurate until it isn't. there's times where we break outside and close outside of that range consistently again and again and again. And those are warnings for us. And when we start doing that, market makers are getting it wrong. The volatility isn't pricing through, and we're moving farther than we should be moving on a day-to-day basis. So while this week was supposed to be a range week, and so far it's maintaining that range, the moves have still been pretty violent. There's nothing showing that that is going to end today. We're 1.25% above the 10-week. We haven't started to curl back. And we're 1.5% above the 10-day, and we have started our decline here. Although the rate of change in that decline has started to slow a little bit. So remember, the 10 is coming up to us, and we were going down towards it yesterday. These tools are telling us that we're not overbought. We haven't moved too far too fast. We have plenty of room that we could move before we would even start to consider an overbought scenario. So that 6% move last week was a lot, but it wasn't too much. Which means we can still go. So it might be a little unusual to expand from here, that 0.5% that we were talking about, but it's capable of doing it because we're not overbought. Bitcoin's up 3.5%. And then Jets at 0.75%, energy at 0.5%, cloud computing, which, be careful with cloud. Sometimes it'll read after hours stuff and then it won't, there's nothing for the morning and it's still just leaning on that after hours. Yeah, that's what I thought. There's no print here this morning, so we don't know if cloud computing is going to be getting any flows. It doesn't have any now, so it's kind of scratched that one off. Bonds are down 0.75%. Nat gas at 0.5%. Now, we've had some real divergence in our tools that has made things a little difficult. Yesterday, we had the dollar going to the downside and the 10-year going to the downside and the indexes going to the downside all at the same time. What wasn't going down was bonds, which is pretty cool in the grand scheme of things. But, that really kind of screws up our tools when we've got the dollar and the 10-year and the NASDAQ and the S&P all falling. The moves that we saw in the dollar and the 10-year yesterday should have had us in the indexes shooting through Globex highs and expanding to the upside. And we didn't get that not even a little bit. And that's concerning. So be very careful with these tools. If they're not working, just own that. Hey, it's not working, and then don't use it, right? Don't try to figure out some kind of swag workaround. Just let it be. It's usually enough of a warning to, get some coffee and a notepad and sit back and watch. Don't even bother trying to get into things. I know nobody wants to hear don't trade. What? And speaking of trading, by the way, you know, I was just talking with somebody yesterday. If you're running an Apex account, you've got the data feed for gold, for oil, for interest rates, for US dollar Japan. You can do trading all over the place. So if it is a choppy, nasty day and you don't want to trade the ES and the NASDAQ, take a look at gold or oil or bonds. Like I said, yesterday, the ZB had way more trading setups, good, clean, solid trading setups than anything that we were looking at in the S&P and the NASDAQ. So expand your horizons a little bit. Yeah. Me, I just want to trade something that is a good, clean, tradable setup that I can put some conviction into and some money behind. Not wishy-washy junk that we, you know, don't have a lot of conviction in. My cat found a cough drop, and now she thinks that's a toy. Crackhead. Bitcoin, airlines, uranium, energy, and small caps. Small caps are more important than we give them credit for, you know, at first glance. We start getting that short covering rally coming across, you know, the broader marketplace. It just adds to the buying, right? We've got the left shoulder and the head. We're working on the right shoulder. You know, and look, we've joked more than once when it comes to head and shoulders. If that's the only thing you've got for a trade, then you don't have anything, right? It's like the pattern of desperate people. It's the last hurrah. You know, if you couldn't find anything else, but you were able to point to a head and shoulders and say, well, it's a head and shoulders. You want more than that, right? With Bitcoin up, should be able to find some things like the Bitcoin proxies, Riot, Mara, Hut, Hive, MSTR, companies like that. And we're seeing this. So we at least have something today. These aren't going to be, you know, great swings, but for some day trade stuff, it'll at least get you focused on something that's actually moving today that isn't going to sit on pause waiting on Powell. The China ADRs are down a little bit. So if we're looking for a little bit like a gap and go, could get a little something here. We had an exhaustion gap up on Monday, just kind of gave it all away, but we've come back up off of that low. So if this is going to continue, then we're getting a nice little scoop pattern here, turn into a cup. Maybe we get a little handle, maybe not, and then the follow through. So we would expect this gap down to kind of stabilize and then begin that move up. So, I mean, we're looking at KWeb, but we can translate that over to things like JD, Baba, Baidu, even something like Neo or Lee. Wow, Lee's a little different still with that earnings flow to be shook off. Not getting anything in the pot stock space. NVIDIA is really up this morning. Closed at 465. It's sitting at 471.5. And Netflix closed 436, is sitting at 438. Those are the two that are up the most this morning. %13 of the S&P is up 0.5%. 16% of the NASDAQ is up 0.5%, including Netflix, of course, and NVIDIA. So we can see semis are getting a little bit of love this morning. NVIDIA, Micron, ON, and Texas Instruments. Got some pharmaceuticals, packaged software. The rest of this just kind of scatters around. I would focus on semiconductors this morning. The kind of the best of the bad lot. So some insight, thank you for sharing that, by the way, is that NVIDIA had news. It's developing 3 chips for China. I haven't read that, so I'm going to just go out on a limb and say it's probably a way to try to sidestep the different sanctions that the U.S. keeps imposing on China when it comes to chips. We impose, chip sanctions that blocks China from certain chips, and then a chip company says, okay, well, if we can't sell you those, we'll make a different batch that's not on the list, a different kind, and we'll sell you these chips instead. So it's probably some workaround like that. NVIDIA would be the driver. The others are just catching the ride, right? MU, on Texas Instruments, things like that. I'd like to see more of the financials this morning. They're always a fun one to day trade. They're relatively cheap, and depending on which ones you focus on, they've got some really nice liquidity to it. Energy, financials, they're always a good day trade play, especially for small accounts. Expensive chip names, it's okay. Don't get me wrong, NVIDIA is always a good tradable product, but don't only get you so far on a small account. Even my good old PayPal is up a little bit this morning. So Microsoft is poised for a continuation. You can see how we're holding above that white line. I believe that's the 3-period moving average. We're getting really close to a new breakout point. Now we're past that now. We're breaking out on Microsoft. Google's right behind it. Just look at all these wicks up here showing the threat that it is trying to resolve at this moment. We're not too far from the white line. We've got, you know, perfect examples of how we can get farther away. We just got to get through this high point, which is what we're struggling with. These aren't daily charts, by the way. That's why we're looking at them in real time rather than using a daily. Daily won't show a candle for today until we get into the RTH. So these are 12-hour charts. They look very much like a daily chart. They're just not dailies. So it has the intraday for us. PayPal's got a really good setup. I like this kind of candle setup where it leaves this wick behind and it pulls back and still closed bullish. It's still in the upper 50% of that candle, which gives us that bullish bias, but it left enough wick behind that we can set up for a trade. So one way to play this is to let it break out, get above that wick point, and then take it. Otherwise, when we dip below the close and come back up through the close of the previous bar, that's your buy trigger. And then you can just move your stops up after we break through the high of the bar. Either way, I like that play. This will give us a nice scoop pattern on PayPal, be a cup with or without a handle, whether we get it or not. And you take a look at NVIDIA, it's expanded pretty far away from that white line, but it's not too far away. We're through the breakout point. We've got examples where we've been farther away, even just recently. So, yeah, it's the drive. Today's candle is very likely going to be this kind of candle. So we'd look at the ADR, kind of lay out our levels. How far can it go? How far should it go? Netflix, same thing. We just crossed back through the white line yesterday, breaking out above the high. Take our last big bar, lay out our levels. Netflix to 439.75, and then 100% of that move would get us to 441.76. And that would be as about extended from that line as you'd want to get. We've got examples of where it's done the same thing before. So it can get, you know, a pretty good distance away from that line, but it's the mean at this point. So, you know, we wouldn't expect it to get much farther than that. And if you take a look at Amazon, Amazon's inside of all this trash. We're IX10. When you're IX10 inside of a really big bar, it's not really exciting. We're inside day of this little bar, that is exciting. So that's a good start. Now we just got to follow through, right? And this is a good setup too. It's not as favorable as the other one. This is like a micro TRB setup, but we just crossed the white line and we've got that wick that I was talking about. The danger sign here is that we closed in the lower portion. If we were to snap a line and look at 50%, we didn't close in the upper portion, and that takes away our bullish bias. So now we could more likely reject across this high and fail to get that breakout. And that's the threat. That's the danger. So measure the big candle. There's our 50% level. Measure yesterday. We're above that 50% mark. It's not overly, you know, exciting. Let's get through that half back point. So far, we've failed to do that. The only thing that we got going for us is the white line crossover and the little bit of a gap up this morning from this bar's closed to this bar's open. We got Tesla in a really tight squeeze too. Using OCR, we got lower high, lower high, lower high, but we've got higher low, higher low, higher low. So we're forming this wedge, this squeeze here. This is gonna go. I don't know which way it's gonna go, but this thing's gonna pop. The market is very much like nature. You have to release energy. You can't keep bottling it up more and more and more and more. It'll explode. That's why we let water out at dams, right? You got to let the energy out. So this is going to make a move. You could try a strangle or a straddle. I'm not overly excited about those kind of options plays, but they do work. Otherwise, just let it pick a direction and then trade it. I mean, I know that doesn't think Captain Obvious, right? But that is a really tight range, and it's getting tighter, and it's going to blow. Looking at how the other fangs are so bullish, I'm more inclined to believe that it's going to go up rather than down. But that's putting a lot of faith in the fangs, and instead of just waiting for it to actually give us a direction. And then Apple also IX10 in a very tight range. I mean, this is fantastic. Really tight range. All we got to do is get out of that range right there. I believe it's a 3. It's a 3. This is a 3-8 combo. When it comes to moving averages, you almost always want to use a pair, not a single. And if you read enough moving average books, you'll get, this kind of a feel for the different combos, different ways that you can use the different combos. And a 3-8 combo is like a surge indicator. I love trend, and I don't mind momentum at all. I mean, momentum is great, but surge is like a parabolic play. We talk about breakout momentum plays that don't pull back, don't let us in. We got to buy on the run, kind of blah, blah, blah. That same concept. So a 3-8 is a fantastic surge indicator. And it works really great on a daily, even though I'm not on a daily, I'm on a 12-hour. It's so close to being a daily. I mean, it's almost a perfect example of a daily chart. We get the intra-hour movement. The Globex shows up on these candles. So I use them. I like it. So the fangs are giving us some opportunities today. We're poised for a continuation in Microsoft, Google, NVIDIA, and Netflix. And we've got starting positions that are range bound but ready to go in Tesla, Apple, and Amazon. I mean, that's 3 for 3. 3 continuations and 3 that are range bound but ready to begin a move. And it would fit perfectly too with a day like this where we keep saying, nah, we made a big move, it's going to be a sideways week, we're probably not going to do anything. It fits perfectly into that narrative because nobody's going to expect it. And they've probably already ran some short calls for the week. And then, of course, we squeeze those shorts, force them to buy, and that adds to the buying, and we get an expansion way farther than we would have expected. So I like the whole thing. There was some great posts yesterday that talked about the optionality that is surrounding the indexes. And so I would not necessarily expect the indexes to expand, right? SPY, the Qs, IWM, that sort. Well, take the IWM back off of that list. The S&P and the Qs very likely won't make the expansion that we were talking about in all of those FANG names, because the optionality, the call wall being over our head, holding us back, is a really big deal. It's hard to see how we can expand through that level of selling because they're just waiting there. Every time we get near it, they're going to sell us. So, until we get OPEX next week, getting through that call wall is hard to see, right? It's hard to see a way past that. And it's right at 4,400. The spot gamma is calling for that as next week's close, which would be a fantastic butterfly. I priced it out last night and it's 15 cents for a $5 wide butterfly. It was 50 cents for a $10 wide butterfly, right at 4,400. And I mean, what's 15 cents, right? That's nothing. That's cool. It's fine. 15 cents, we can handle that. So we might see that expansion in NVIDIA and all those names that we were just looking at, but I wouldn't expect the same kind of love in the Qs and or the S&P. Not with that level of optionality surrounding us and keeping us trapped for another week. Now, after next week, game on, which means today with Powell and everything else, we could get violent and we can jump through that call wall on an intraday. We can go through it to the upside and, fiddle around that 44.20 area. That doesn't mean we're going to keep it and we could fall right back down in again. Same thing with any downside move today. We could push down into that 0 gamma level, but I wouldn't expect to stay under that gamma level. And we're a long ways away from the put wall. It's like way down here somewhere, 4,000. I don't see that on the table at all. Not even remotely, not even a little bit. So watch the news. Keep your eye on Finance Juice. It's a free resource, right? You can keep track of the statements being made by the different speakers today, and watch the breadth. We're looking for that rising tide through all the sectors on a day like this. Y'all be careful. I'll see you tomorrow.